The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 12th day of April. My pleasure to be here. The S&P is up, the E-minis are up 24 at 2667. On the left side chart, you will see that we haven't yet taken out the high of April the 5th, 2677.25. Close, but we haven't taken out. Look at the cluster formation. If ever that was support, that should be support. This whole area down to the 2612, 200 period exponential moving average, then the 2600, which is the 200 period simple moving average, even down to the 2552 low that was made 2 weeks ago. However, to do that, we've seen that there's been a plethora of bad news over the past two weeks. News that was presented to the market and then taken as a very short-term big negative, and very often either the same day or the very next day, there was a complete opposite move, but to the upside, just like today. We had a sharp move to the downside yesterday. Now we're sharply up with the S&P. Cash up 22 at 2665. The Dow is up at this particular point at 24,485, at up to almost 300 points. Very interesting market. However, if you usurp, if you use this energy and you don't get that actual move to the upside, that makes you somewhat vulnerable again to retesting important support levels. What I said to my subscribers to my opening call this morning, some were surprised that I've been having long positions here instead of more short positions, is that I said this market is looking like a racehorse just ready to get out of the gate and try to run to the upside. It would just be a sprint. I don't think there's anything more than a sprint here. However, a couple of things are really important. We have a backdrop politically, socioeconomically, in a number of different ways that says there is some vulnerability to the downside, which could put a lid on the upside. And until those are removed, and I don't see anything being removed in the shorter term, consider that we're in a pretty decent trading band. That means that individual stocks and individual sectors that are, in a way, a little bit separate from the market should be able to have a pretty decent run to the upside. And then maybe they come back down again. But it's worth, I think, trading the upside for two reasons. One is, if you get in this early stage of an up move, it means that if it turns out to be more than just a shorter term position, all you do is raise your stop or take some off and keep a core position. It's a wonderful trading vehicle and mannerisms that you can pick up, characteristics and techniques that you can use in your favor. And if you're wrong, you have a tight stop, you're done, you're out, you've got cash again. So I think this is very nice. If you look at the 120-minute chart, I'm just right now inclined to give this more of a leaning in the 120-minute E-mini to right here, to a cup formation that's broken to the upside and closed above the left side high. Peak F in the 120-minute chart, this chart right here, are 2666.75. All that bad news over the last couple of days, all it did was test a 2626 level and then make a higher high and higher lows. So that pattern's in place. I think this is a B, and I think we're going to try for a C and a D. Now, the big question is this. I'll get to it in a moment, but the question is, what will the financials do tomorrow? What will GE do tomorrow? Earnings start coming out for the financials. Okay, let's get to the nitty-gritties. 2643 is a 9-period exponential moving average. It's critical that it holds on any further weakness. Let's go straight to the Dow. INDU, Dow up 300 points. Right now at 24,490. Just missed the gain, just trying to get a long position, missed it by about 10 cents or something. No, actually it was a little more than that, but we did miss it, and it's unfortunate because I didn't want to be in the long position just on the shorter term trend. However, fortunately we have a sector that's doing even better on a percentage basis, so I'm happy with that. In fact, we chose a stock to go long today which fortunately is nicely above the entry price this morning. And that's all you can do. Just go step by step. However, here again, see the high of 24,622 in the Dow on the left side chart that was made on the 5th of April? We need to break that, and we need to break it so that you've got an overlapping leg B to the upside. If it closes strongly, all of a sudden you're filling in gaps on the left side, and the next higher that you would tackle is 24,977. So far, the MACD is good, stochastic's good. I like what's going on, and the right here, the H pattern in the weekly chart looks like it's going to go from a lowercase h to a possible lowercase m. Let me get rid of the 120-minute chart here. It's not relevant at this particular point, other than to say it's bumping into strong resistance at the 200-period exponential moving average at the 24,492 level. We'll see how it handles that. Now, right here in the S&P, I don't want to go into monthly charts right now. It's not necessary. You can only go to monthlies if the weekly already starts to change its characteristic, and it hasn't yet so far. S&P just missed by a fraction, going to a leg B so far today. 2672.08 is the high that's needed of the 5th. You want to go 1 penny above it to start leg B in the Chapman wave. Call it gray leg B. 2671.17 is the high so far today. So a bit less than a point away. I think it's going to try for it. We'll see. But the MACD is improving, and the stochastic is improving. On balance, volume is good. It's not great in the daily chart. Weekly chart we'll talk about tomorrow as we get into the end of the week. The QQQs, this is very important. QQQs have been leading. They're in a gray leg B. I'm still, for subscribers, we have a short position, less than $1 from the all-time high. I'm holding that position. I think it's going to be a position that has longer-term implications, intermediate-term implications. But in the meantime, you can have a bounce. It's hit some kind of resistance here. It's at 162.16, up $1.86. Interesting, it's up at 1.16%. The Dow's up 1.20, a little stronger, and the S&P's a little weaker, only up 0.90. So give you parameters. I said the 163s will be the likely resistance level to monitor. 160.20 to 159.90 is key support to hold going into Monday. Let's go to the IWM. IWM right now. IWM is at 108, up at 154.77, up only 0.68, but it actually is leading in its characteristic of the daily chart, because this is a much stronger leg B than the Qs. And at this particular point, although I'm looking at the IWM as if to say, the weekly chart, remember I've been talking about this for a long time, saying it hasn't broken down and it hasn't broken out. It is in a trading band, but the weekly chart is looking much better than the others. The H pattern didn't go even close to the February the 9th low. And the monthly chart is still holding beautifully above the 9-period moving average. Will this be a leader? That's going to be a question. I have to tell you something. If the 160.62 all-time high is taken out in the next 2 weeks, I have to consider that we're going sideways to consolidate, and we're not going to break down to retest that February low. And we'll see. Go one step at a time. Gold, as I mentioned in the update I just did, is not acting all that well. It's down 18 at 1341. It led the day yesterday. I thought that was, I spoke about it in my, actually it's worth taking a little moment to talk about it, because a lot of people are looking at gold and wondering what's going on. I'll talk about that when I get back. Basil Chapman, Tiger Technicians Hour, Dow's up 300, and I'll be right back after these important messages.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So a couple of things I wanted to look at here. You see gold, one of the, there we go, right here. Gold, which is down $18 right now at 1341. That was a leg C. And I had a question from a tiger saying, did the Chapman Wave miss the buy on the gold? And what I said is, if you go back to the close, even the close on the 10th, it was still way underneath this character, this particular technique that I use, which is the Chapman Wave inside track repellent zone. It hadn't even gone close. That was somewhere in the 1350 area. And the close on Friday was 1345. So I said, no, there was nothing. Yes, the MACD was acting okay. Stochastic was really quite weak. On balance volume did move a little bit, but it really wasn't great. So I had no reason to even think of buying it other than the fact that there was the outside chance of a military confrontation, which would really help gold to go much higher as a means of some kind of protection, like a safety factor. But that's the only thing I could see. Well, intraday, it went soaring. It went higher, much higher than the trend line resistance, this dash trend line resistance, in what I call a gray leg C, because it's way under the previous peak D that was made back in January. So I had no, but at that particular point, I said, yes, that's good action. But when I analyzed in terms of the weekly chart, I said, but I still see the weekly chart is not that strong. So all I can say is, yes, it missed it, but as of now, it's saying there's a possibility that this move could go higher. The best risk reward was not there for me at all. It was just too late. Now I would have waited for a bit of a pullback. Nothing like this. This $18 pullback, because it's a gray leg C and not a blue. Blue would imply it should go to a D. Gray C says, it could fail. Well, it's failing right now. It's even under the 9-period exponential moving average. Why? Because I think I said that I saw nothing in the gold stocks, not all of them, but in the ones that I follow, that said that this was a move that was sustainable unless gold it could move even higher, and that silver had a very good move, but it really didn't break out, but it was a good move. Stopped dead at the 200-period simple moving average. Now it's pulling back. It is also just under the 9-period moving average. And that weekly chart said silver's still sideways. So that's I wanted to clarify that I I like very much to be able to say I was wrong, and this is how I will correct it. This is what I can do. And I like to say, hey, it wasn't even in the technicals. I didn't miss anything. Now I have to rethink it, but it's a different ball game. And that's all you can do. And in this particular market, what I've emphasized to the subscribers, we have to go with what we think is working and just go with it and then reverse course if everything else changes. Now, what's really important is, for instance, for subscribers, in my little heading that I had in the first paragraph of my Traders Corner, besides all the work I do, is the Traders Corner really sums up exactly what we're looking at, what worked yesterday, or what didn't work, what's ongoing, what we're looking to buy or short or whatever it is. Just a quick, brief paragraph, and that sort of sums it up for those people who don't have much time to read the entire litany of stuff I send out every day. And in that, I said that there were 3 stocks I mentioned. I chose a 4th stock because it has a different kind of potential. It has an under-the-radar potential, and it's a low-price stock. I like to mix different price ranges because I have subscribers, in all walks of life, in all fields, with all different time constraints. So I think it's very nice, at least for my subscribers, to be able to get very low-priced issues once in a while. I like to do that. It's nice that you can get it. You don't have to put up too much capital, and there could be a very nice percentage gain, and that's important. So out of the 4 that I chose, the one I chose, we got it at a nice price. It is up pretty nicely. It's up about 1.6%. That's not bad, a 1.6 gain in what, 3 hours? But that's not the issue. It was a choice of areas, like a brokerage area. That one's up about 1.4%. But then it was also a choice in a whole different sector that I've never, maybe once or twice we've touched before. I wanted to get in. That one is up 3%. So we didn't get in, but I mentioned that I liked it. And then another one in a technology sector, which has been kind of out of favor for a long time. I had it already. I typed it up and everything, and then I changed and I said, no, I'm going to be a little more conservative. I'm going for the one that is in biotech. It might be in a dangerous field, but this seems to have a number of the attributes that I do like in the characteristics and trading style. So 2 of them actually moved 3.4% so far today. Mine's moved the 1.6%, and another one I didn't get is up 1.4%. And that's the way it is, because you have to make decisions. Fortunately, we do have something that's moving up. Even now, it's up 5.5%, and that's really good. So here we go. Silver, I want you to say the same thing. Let's go to high-grade copper. High-grade copper at this particular point is down sharply, down 3.06, made a peak D. Remember, I had a whole webinar based on peak Ds. Wow, look at this one. Sharpest pullback it's had in a little while. Copper, but it's still holding okay. Above 3, it's okay. Below 3, not okay. Above 3.16, nice action, shorter term. Okay, let's go to crude oil. Crude oil, remember, it was breaking out in the upside, went to a leg E yesterday. I called it an E yesterday. I'm not going to give it an alternate count yet. Holding very nicely at 66.77, down 5 cents. MACD's good. Stochastic's just okay. On-balance volumes turned down. Weekly chart is just okay. So I'm going to be watching this because it hit that at peaks, leg C. In the weekly chart, it hit the 67.41 200-period exponential moving average resistance. It's in leg D in the monthly, and it made a peak G in the 120-minute chart. So we'll keep our, we don't have a position just looking at it. Would I short? No, I just don't see it as a short right now. Okay, now we're going to go to bonds. James bonds. This is a peak E, pulling back sharply down 99 cents at 120.52. Let me show you something about the TNX, which is that's a 20-year yield, the 20-year TLT, but we're looking now at the 10-year, and the 10 years just spiked to the upside. And this is what I've been talking about. In fact, we'll go to a break. When I come back, I'll show you my Chapman wave analysis of the triple yield, the 5-year, the 10-year, and the 30-year. We'll look at that. In the meantime, back at the ranch, had a question about the transportation index, up 3 at 186.4. It's in a trading band. This particular low is going to be very important because if by Tuesday, I'm not saying Friday or Monday, I'm saying by Tuesday, if the IYT, the iShares Transportation Average, has closed, not taken out. It has to take out and close above the high of the 5th, 188.61. If it closes above that, I think that this rally could have more legs to the upside. We'll be monitoring that real closely. So that was the IYT, and I mentioned the XLF. I said I'll talk a little bit about it. So the XLF is having a very good session today, up 51 cents, up 1.84%. Financials, we are along this. And I'm looking at it, I'm saying tomorrow, with the earnings coming out, bank earnings start coming out tomorrow, this is going to be very important, and I'll discuss that as soon as we get back. Meantime, back at the ranch, the VIX index, which is trading at this particular point at 18.68. Now it's starting to make slightly lower lows. It's still pretty high. That gives it room to come down, or it says if it holds here, nervousness is going to curtail the upside in the market. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm going to show you something here. The E-mini trading at 2667.75. This is the the June contract. It had a left side, right side price time match. Now, you remember over the last week or so, a number of people have been asking me about my on-balance volume. Not mine, it's Joe Granville's. It's my use of the Joe Granville's on-balance volume. As I say, it's a running total of the number of shares traded. You add them up on an up day, you subtract them on a down day. Everybody should have a different number. If it depends on where they start, unless they start from the very day the stock was issued. Most people don't do that. So, but it gives you some sense of buying ability and buying action and selling action. I tend to use it not for the numbers, just for the total of the numbers on a closing price basis. And if you look at this 2-minute chart, you see unbalanced volume was late in terms of picking that top, because the peak D, remember peak D in the 2-minute chart back at about 11:15 comes back down, and then it did pick the exact bottom. So it's how you use it and in conjunction with what. So unbalanced volume makes that V-shaped bottom, and now then it went flat, rallied a little bit, and now it's copying the price action. And the price action for the plumb line, the midpoint, it's taking too much time. Yes, it can go. Now you have to move it. Now you have to use some artistic license. I have a particular methodology of doing that. I discuss it in any of my teaching webinars that I do. So that's something that was asked about. I'm beginning to try to build up a little repertoire of what I think a lot of people have asked me about for a webinar that I'd like to do, another all-day one. I love those all-day webinars, but I just need to think it through. We've done the PD. I know there are questions. How do you get the target line, the price, the resistance or support, Chapman wave inside wedge, target line? I might combine these things for those of you who are trading. Not even trading, even swing trade, doesn't matter. You've seen me do this. I did that on the monthly, going back, and it was a 70 weeks up and 70 weeks down for the dollar. You remember? So there are. Now we're expecting a leg D in the 2-minute chart. It went to a peak C. There it is. There's your leg D. It's a potent thing, this leg D in the Chapman wave methodology. And I love when it works out live. Now we've got the Chapman wave inside, there are. The inside track resistance has just taken out that resistance, and you've got the pattern on the right, which is the Chapman wave falling axe formation. Here you go. Put that in. There you go. Immediately I draw the arch. So the cup formation doesn't say it's going to work, but it says that by we're at 12:33 right now. It says by 12:57, somewhere around there, we should be testing the high right here, the high that was made at 10:30 this morning of 267.1.50. We'll see. Could be completely wrong. We'll see. Okay. Next question is, so could I look at the XLA? That is the XAL. That is the airline index, the ARCA airline index. Nice move up today. Made an inverted V, like an H pattern, but inverted V pattern. Stopping, it's just above the 200 period exponential moving average, trying to go for the 114.64 9-period moving average. It's at 114.10. So remember what I was saying about the IYT? If it can break out and go above the high that was made, I think it was on the 4th or 5th, that'll be really important, but it needs to close nicely above that. Well, the XAL has been battered to the downside. I think that there's more downside to come, as the upside's a little bit limited here. And you'll see Delta, I was asked about, up 132 at 52.76. Really struggling. It made a peak F top in the Chapman wave most recently back in mid-March. It plummets down from the 57s to the 51s, trading right now 52.76. Now, I think the H pattern in the weekly chart is telling us that the airlines are struggling here. I don't see them leading. I do see, what is CSX doing? CSX trading right now is up, very nice, up 56.33. Much, much better pattern. It actually went to a peak C minus, and that was very interesting right here. The peak C minus, it was under the all-time high of peak E in the weekly chart and peak D in the monthly chart. So this is a nice bounce, and this is telling me that there are sectors in the economy that are doing really well, and there are sectors that are starting to lag. All right. So CTX, which is CSX, trading at 56.35, up $1.34. CSX Corporation, rails are doing quite nicely here. Next thing I was asked about, AAL, yeah, made a peak. What is that? The peak A, B, C, I believe it's a D in the 57s. Plummets to the 45s, trading at 46.44. Look at this chart. No, I think this is one of the reasons. What is love doing? L is for the very young. Okay. A, B, C, D, E, F. Makes a peak F in the 61s. This is Southwest Airlines, one of the better airlines. Plummets down to the 53s, trying to rally. Yeah, there could be a bounce, but I would just call it a bounce for now. So I hope that answers the question about the airlines. Next question is, so XLF. XLF calls 6:15 expiration, 30 strike, 18,874 volume. So the question is, will the XLF, okay, let's go back. Good question. Will the XLF rally into, for the next couple of weeks, months actually? And my answer is, I think that it can rally shorter term, but there is a lot about the daily and a lot about the weekly that suggests it's going to be a bit of a struggle. Whether it takes out the 26.55 low, we'll know tomorrow if the banks really pull the market down and come up with earnings and, you know, mortgage. Surely the mortgage business must be in deterioration right now. I mean, the yields have been going up. Everyone who wanted to get a mortgage must have done that over the last many years. You went all the way below 3.5 for the 30-year, and now it's about 4.25, I think. So I wouldn't be surprised if that whole area is deteriorating, and that impacts the banks to certain banks in a certain way. So let's see what happens here. I suspect that the banks are in a big consolidation. I think that later in the year, banks are going to really move to the upside. Then it's going to have to do with yields going higher, whatever it is. I think it's time. If you look at Goldman Sachs, that was another question. Goldman Sachs, nice move up, hasn't gone to a leg C, but it is moving with the technicals improving. The weekly chart just says, you know, this could rally, but it's going to have to do a lot more backing and filling. Monthly chart is pretty good. It's in leg C. So we're watching this very closely. Next question I had was right here. Oh, let me just refresh this. Paul wants to know about AVAV. AVAV. Whoops, type it in here. AVAV. Arrow, vroom. What does it say? Arrow something or other. Arrow, vroom, I can't read it. It's trading at 55.65 up $1.35. Whoa, look at this. Wow, good eye. I'm in AVAV from yesterday at 53. Do you think it can hit the swing high at 58-ish? Oh, I'm going to take a little time. Oh, good move. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking at, what's the time? Good. We're looking at AVAV. Now I've got the whole thing up there. Now you can see that if I stopped reading it halfway through the name, I'd really be confused as to what on earth it could be, because it's a mix of different 2 words. So what it is AeroVironment Inc. Nice catchy title, AeroVironment. I suspect they have something to do with the environment. I'm just guessing. So it's acting, unbelievably well. And I'm just putting in, so this is a brand new gray leg A in the weekly chart. And I didn't get a chance to do the monthly, but I'll do it. It takes me 2 seconds. Let's go. You always must identify the lowest, most obvious low bar. There it is. I want to go back far enough. See, if I went to here, I would have got a different reading. So this is A, this is A, this is B, this is C, and that's perfect D. There you are. You've got one full buy mode and a sell mode. Goes to a new buy signal and then buy mode right here. And what do we get? We get A, B, C, D, and the MACD is still very positive. Stochastics pull back under 80%, trying to turn up. On balance is lousy. So this is what I'm looking at. The monthly chart says this is in play. This is a stock that, for whatever reason, is in play. The volume is not fantastic. 250,000 suddenly does 1.5, 5 times the usual volume. Today, so far, is already 218, and it's, actually, no, that's not so high. And it's broken out. So the question is, I guess the question is, I am in AVAV from yesterday at 53, and it's trading at 55.71, having hit 55.98. Do you think you can hit the swing high at 58-ish? Now, this is going to be very important. Let me use a weekly chart to show you what I would automatically do. I can't, this swing low right here of March, where it went from the high in the 58s down to a low of 41, I can't use that because it's going to take months to get there. I want something quicker. So I choose a particular candle that's part of the characteristic, is part of the techniques that I teach, but I even want to show you something more important. You see this, I'm going to expand it. I chose a stock today for my subscribers that had very much the same pattern. I don't want to show it right now. It's not fair to subscribers. So let's do this. I'm going to make this nice and thick. How much time do we have? We got time. Let's treat this as if it was Chapman Wave Detailed Friday. And make this green. And I'm going to make it thick so you can see it out there in the hinterlands. And then I'm going to do another one that goes like this. Change the color to maybe pink. Red or pink. Pink will show up a little better. and I'll put it in here. All right. So you see this narrow channel that has come down. I actually like to see even more bars, but see that narrow channel? There's a Chapman wave technique that says if you break above that, you can have a pretty darn good bounce. And you have to first of all treat it as a bounce. It's not like it's breaking out. But my eye says, wait a minute, you can get an equal 1-to-1 Chapman wave expansion to the upside based on this particular pattern right here, if in fact this is going to go higher. Give me a second. Style, solid. Thickness, make it nice and thick because this is something I want to show you as a demonstration. Color, let's make it blue. It seems to show up much better. Let me have a look in the Tiger. There we go. So, and now here's the parallel. See, it has to be a Chapman wave 1-to-1 expansion, has to have the same degree of angle up or down. So you go from here to here, and it says that in this month, April, there should be a rally that takes you to at least 59.95. What was the high? 58.99, all-time high on the week of December the 22nd. So I'm suggesting to you, yes, there's a really good chance. It doesn't have to be this week, but it says that in this particular technique, this is the time and price that I'd be looking for. Now, what could go wrong? Let me show you something very interesting. In the daily chart, if you got yesterday's move and then you got a pullback and you were underneath the close of yesterday, which was at 54.28, and in fact you went into the middle of this body of the candle into the low 52, maybe even took out 52, I would say to you, uh-oh, that's a real problem. This is follow through. So let's just say it was earnings. I don't care what it was, whatever the announcement was. This is an announcement. This is not because somebody said, hey, I'm buying it with a gap up opening. A gap up opening of 46.74 was the high the previous day, not the close, but the high. And then the low was 49.09. I mean, that's news. That news is very positive, and it closed above the candle, the last major candle on the left side of the 16th, which had a high of 55.34. So I'm going to say to you two ways that I would do it, Paul. I would say I'm going to raise my stop on part of my position to today's entry price, or maybe a little lower. The entry price was 54.55. It's $1. It's over $1 higher now. It's about $1 higher. Actually, it's less. That's a little too much. I'm going to go to the body. I'm going to go to the close of yesterday, which was 54.28. So some part of the position has a stop of 54.28, number one. Number two is within the context of this moving in leg C, and I believe it should go even higher based on the MACD, stochastics playing catch up, and that's the one thing that I was looking at. Will it stall? It seems to me that even if there was a pullback, I would hold the core position because that pullback says it should go to a leg D, at least a D in this particular move. But the move needs speed, and I would have to say that it needs to do it by Monday or Tuesday. It needs to get into the 56. This is tough. 56, what was the high? 56.90, let's call it 56.80s. It really needs to do that very quickly. And if it does it, that's great. If it takes 3 days or more, just stalling without breaking down, that's okay, but it really needs 2 days time and it needs to break even higher. I hope that helps you, and congratulations. I don't know how you picked this, whatever technique you used, congratulations. Very good move. Oh, you're in at 55, you're in at 53. No, that fits perfectly because I'm making the 54 area. Yes. Opens. Yeah, 54, 55 was the open yesterday. That's kind of the area. And just under that, I take something off. Hey, nice move. Congratulations. Masdow, Roy. Oh, Roy. Hi, Roy. I didn't see you. How are you doing?
Basil, very good, my friend.
Good.
Thanks for being on air. I learn a lot from you when I do listen. And I just wanted to call in to ask you a question, if I could.
Yes, please.
Yeah, Basil, I was trying to find out, where the market's going now. I'm trying to, get back into the market, and I'm trying to figure out where I should get back in as far as on the Dow goes. Would it be at, 23,000, 21,000? Where's it going to settle? Do you have a prediction?
Just let me ask you quickly before we go to the break. Is the question for intermediate term or what kind of position? Intermediate or shorter term or what?
No, it would be intermediate long term, I guess.
Oh, okay. I'll answer you as soon as we get that. Please hold. I'll be back with Roy.
You don't buy into that nonsense, do you? You can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, we're back. Just as we're going back to Roy, we're going to talk about the Dow. I just want to say that Boeing up 10 is at 337. I had a lot of questions about Boeing. Yes, if Boeing takes out the left side high, this is going to apply to the Dow as well, of 338.96. I think it can go a little longer to the upside. This one is actually improving the weekly finally, but I still think that there's a real good chance that Boeing will be coming back down to retest the 310s over the coming 3 weeks. But in the meantime, it's acting well. Now let's go back to Roy. So Roy, this is what I'm going to say. I thought about this during the break. I've actually thought about it quite a bit lately. The Dow is down 2,000 points from its all-time high. If we continue in this particular fashion, what I think we're going to be using up is time much more than price. I still see the Dow coming down to do retesting, and I would not be surprised if the 23,000s actually breaks over the coming, I would say, 4 to 6 weeks, that it actually gets taken out to the downside. But the longer we use up the sideways move and Triple M and UTX and stocks like that, key cyclical stocks, Boeing can consolidate the big moves they had and the consolidations that they're in, if they can just take more time. So I'm going to say to you, and this is very unusual for me to do this, because I'm looking to re-short the Dow at a certain point, not just yet, but that's what I'm thinking. I'm going to say to you, because we're talking intermediate term, and I do see later this year that the Dow starts to go towards all-time high. Yep, all-time highs. I'm going to say to you, if you're talking about the Dow itself, I'm going to suggest right here, knowing that there's a risk of about 5%, could be a little bit more, I'm going to say start a small position, and then next week let's talk a lot more about it. But to get your foot in the door, saying, hey, the longer term looks very good, shorter to intermediate term still looks very shaky, but I'd like to get my foot in the door so I can get a better feel for it, not just watch it. I don't know if that appeals to you, but I'm just saying, like a small position in the diamonds, just to be there. And then maybe tomorrow, if you want, you can call me back and tell me what you thought about that. But that's kind of my thinking right now, knowing that there's a downside risk, but just getting your foot in the door. Does that sound okay? Oops, I'm not sure if Roy's there. Oh, Roy is there. Okay, Roy, give me a call in the next 2 days. Let's see what happens. Stay tuned for Steve.
No
I'll
matter
be back.
what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology